Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is a Wartime Trading Strategy Session. We've got a few markets that we're going to look at, but I have to tell you right now, so much has happened since we were on this morning. I mean, it was only, 3.5 hours ago, 4.5 hours ago that we were on, and we went over some of the things that we needed to be looking for, and they're all happening. I mean, they really are all happening. You're seeing the Kurdish invasion has been confirmed. It was sort of a little bit of scuttlebutt this morning. It's been confirmed. U.S. has pledged air support on this invasion. We've also got the Iranians. Finally, we heard something out of the foreign minister that was a fascinating statement and something that we've got to price in. We've also seen an oil tanker get hit. We saw a British oil tanker get hit. They're not confirming it, but that's pretty much what happened. I'll show you the story that I'm looking at now. Now, everything I'm going to show you is going to be from mainstream media outlets. I'm not going to get too far into the weeds with the alternative media. However, you need to be listening to all of it. Don't just look at CNBC because that's what I show on this. I do it because it's free, and those are the headlines. That is the official narrative that's being floated across all the channels. That's why we look at that. But you should have your ear to the grindstone. I'm talking podcasts. I'm talking YouTube channels. I'm talking live streams. Just because you disagree with somebody's politics doesn't mean that they're not getting intel that we're not getting. And remember that. We are in the age of information. We are in the age of everybody's got a live stream. I mean, I'm out in Dillon, Montana. I'm a day trader out in Dillon, Montana, and I have a live stream. Everybody in the world has one of these things, but some people really have deep connections and insights into the market. And we're going to show you exactly what's happening here. We got some game plans on different ways to attack this thing, but we've also got to understand that these leaks that are starting to come out of the military, starting to come out of the government, a lot of these folks, these talk show hosts, these live streamers, They have access to these people, and they're getting the intel a little bit ahead of what everybody else is. Now, I'm not saying that all of it's true. There's so much disinformation out there. We've got to be very careful. And typically, we're not seeing things priced into the market until it's confirmed across the mainstream media. But when you hear an idea or you hear something on the street, it at least lets us get ready for it. I heard about the Kurdish invasion Tuesday. Didn't say anything. We knew we were ramping up weapons to that region. We knew that that was a real possibility of something that can happen. And then to see it come to fruition now, I mean, you're just sitting here going, well, what's next? So there's a lot going on out there, guys. And we're in a time when being right is an actual industry. When somebody gets intel and they pass it along to their viewers or their followers or whatever, they get street cred, and that street cred translates into dollars. So there's a lot of leaks. Expect more and more leaks as we go on. The initial strike was a big surprise out of the United States, but now as the operation starts to unfold and we start to see a little bit of pushback from Iran, get ready for more and more and more of that. Very, very important that we understand that information. I mean, it doesn't sleep, and it's got a million different outlets now. It's a lot different than when I was a kid, when you just turned on the news and you had 3 channels and you watched, and whatever, they were all reporting the same things, and whatever they reported was the news. So that's what we need to think about information. So much has changed in the last 4 hours. I can hardly believe it. We're going to cover some of the developments. We're going to go right out to the 9 EMA strategy, though, real quick. We just got an interesting play right here. We had a 4-hour. I was watching this on the Bitcoin. We got a 4-hour sell. That's probably a pretty good position sell on Bitcoin. That's a sell right beneath 70 as you see the markets begin to fall apart. That area could be a big one. So you basically would be looking at something like a stop loss of around 75 and then maybe just a 1-to-1, or you could be shooting for somewhere down in the mid-60s. That's not a bad trade. It may or may not work in this news cycle. Who knows? But that's not a bad way to look at that type of a trading strategy. So I want to welcome everybody back to the room. We got a lot to cover today. So we're going to go over a few cross pairs to give you some insulation from the U.S. dollar. We're going to look at the U.S. 30 trading at an absolutely huge level. It is the story of the day, no question about it. And really, crude oil, $79. Gold coming right down to 5,000. It might come down to 5,000 during this live stream. The dollar index on the march to the north. We're seeing capitulation. Got some pretty good level to work with in the Australian dollar Kiwi. We're going to look at that as well. If there's any markets you'd like to look at, go ahead and shoot. We will be looking at a few cross pairs, though, because I want some insulation from the dollar. We can't be dollar-centric right now. We have to start thinking about other markets, that's for sure. So it's good to see everybody back. Callie Buckle, good to see you. Tina Jing, good to see you. Tina, welcome. I'm confident everybody's handling the volatility well. Let me see. FR, where's the money flowing to? It's going into the dollar right now. That's a bad sign. That is a bad sign. People are deciding to go into cash. That's like the ultimate scare move. I mean, I know gold and silver and all these different things are safe havens, but right now when we see capitulation, that's when you know a market's really, really scared. When you see capitulation, and what I mean by that is you've got the US 30 is absolutely crashing right now. This is a monthly chart. We're trading at 47,750, 47,778. That's a monster level. If that level goes 38% on that retracement of the current wave, we're coming way off. We're coming way off if that's the case. So I'm watching that closely, and that's directly correlated to what we're seeing in the dollar index this month. We're already 5 days into the month. You're looking at up almost 2%, 1.5%, 1.6%, excuse me. But for 5 days, that's probably as big of a 5-day gain as we've seen in the dollar in a long time. This was more of a prolonged gain back in July. That is big. So to answer your question, where's the money flowing to? It's flowing into the U.S. dollar. The U.S. dollar is the ultimate safe haven. That means that you do believe that everything is going to go to heck. You start snatching up dollars over every other foreign currency. It's exactly what we saw in the initial stages of COVID. It's fascinating because if this trend continues, there's going to be some major, major downward pressure on U.S. equities and risk assets. We're going to try to maybe pick some bottoms we can look at, but I see a scenario out there where this gets really, really ugly, and it's starting to feel like this war isn't going anywhere. I'll tell you what I mean in a minute. And I'm not being a pessimist. I'm not being an edgelord. I'm not being a doom scroller. I'm not being any of that. I'm just going to be honest with you, what I see and what I think. And my initial gut reaction last Friday night when we covered the 3 a.m. my time, so in the day for you guys. But when I was up in the middle of the night covering that thing, my initial gut reaction on that wasn't good. And it's starting to look like that could be the case. that could be the case. So we'll see exactly what's going on. So that's to answer your question, FR. It's flowing into the U.S. dollar, and that means everything else goes down. Interesting stuff. Oh, and oil, of course. I'll talk about that in a minute. But that goes. We covered oil for so many hours this week. I put out a new YouTube short on oil. Check that one out if you want to know about oil trading. Let me see, Jason. Good to see you. Yo, Jay. T. Marina, always a pleasure. T, good to see you. What is going on in the natural gas market? Well, we had inventories today, Tina. I'll cover that as well. But natural gas, it's all about the Strait of Hormuz. It's all about the 20% of the global drop that goes through that little narrow piece of water, and it is under fire right now. Let me see, speech fact. Yeah, do my best. I do my best. Let me see, FR. What are the central banks doing with interest rates? Well, right now, you're talking about a pause. We covered that on this morning's live stream. Feel free to go back and check that out on the Switch Markets YouTube channel. But it's all about right now, the powers that be here in the United States are going to hold rates firm. We've got a 97% chance they hold them this month. We're not even pricing a rate cut until July now. That's fascinating. The next Fed chair, Warsh, is going to cut. That's going to force a lot of other people to cut to keep pace, at least in the export sector. That's a complex discussion. But what are the central banks doing with interest rates? For right this minute, my guess is this war is going to be a complete pause for everything. I don't see anybody cutting just yet, but when they start cutting again later this year, they are going to cut, and they're going to cut big. So that's absolutely huge. Good to see everybody in the How to Trade trading community. Bobby Bob, hi, Coach. Welcome back. Very anxious to hear the strategy to using this on wartime. Well, I mean, the strategy is relatively simple. Let's look at energies. Let's look at energies. That's for sure. Tuku, good to see you. Ralph H. Andrea Garwal. US 30 is at 47,750, and that's the big one. That really is the big one. So my wartime strategy, clearly, this is very simple. This is very, very, very simple. As a matter of fact, let's just go this. I never use this screen because it's too confusing, but this is simple. US 30's on our left. Crude oil's on our right. Inverse correlation, if I've ever seen one. We've been pointing this out all week. There it is. That goes up, that goes down. Any questions? Any questions? WT crude oil, when it rallies, you're going to see pressure on stocks. And the reason why is that the crude oil markets, natural gas, a little bit different. Crude oil specifically in the Persian Gulf region, the UAE, Iran, Iraq, that entire region is built on energy, specifically crude oil. There's a lot of gas there too, don't get me wrong, but crude oil has been the staple over there. And when we see action in the crude oil markets, I would view that as a leading indicator. When that thing goes up, expect stocks to go down. It's not the other way around, believe me. So when we see a pullback here, maybe in U.S. oil, then you're certainly going to have an opportunity potentially to bid U.S. stocks. But that right there that scenario is not really developing right now. I don't see much to the long side of U.S. oil. However, U.S. 30, Andrea Garwal, good observation. I started off the live stream with that. There it is. That is your pullback. That's the first monthly pullback we've had since the April craziness, the tariff craziness of last April, about a year ago. You haven't had any pullbacks. I mean, it's just been like this, boom, 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 boom. So do bidders buy the dip, or do they start running for the hills? We're going to know very soon. If the US 30 does trade beneath this level, look out. It means that things have definitely changed. Now, where would my next entry point be? This. There it is. So, to answer your question, a wartime trading strategy. Number one, I'm watching crude oil every morning. I'm watching it every minute, but really, realistically, I want to know if oil's up or down. If I know oil's up, then I know stocks more than likely are going to come down. If I see crude oil pull back and have a big move, then you're going to probably see an opposite action, a bullish action in the indices. But here's the thing about all of it. If crude oil doesn't do much, let's say it just hangs around a little bit, stocks are going to be choppy as well. So that might be a situation where you see crude oil up a little bit, maybe stocks go up a little bit. We are talking about moves. I'm talking about trend days right now. That right there, the crude oil price is up around $80. We're going to look at those in a minute. That has the potential to derail the entire Trump rally and basically throw a monkey wrench in the administration's economic policies. This right here is economic warfare at its finest, and you are seeing what can happen. This isn't really about uncertainty now. This is about, hey, we're starting to see the picture that this isn't going to be over quick. And if it's not over quick, what does that mean to energy prices in the global economy? It means it's in big trouble. That's what it means. So that's for sure. Let me see. FR, is liquidity entering the market or leaving the market? There's huge volumes. There's tons of traders. So from the trading perspective, you would say, okay, liquidity's entering the market. But I would look at liquidity as sort of from the institutional standpoint. I see money going to the sidelines. I see money going into the sidelines. I see gold sort of holding its level. I'm not really worried about the big sell-off today in gold, but what I am worried about is the U.S. dollar rallying the way that it's rallying. When I see that dollar goes up, that tells me that some of that money's coming out of the system. And, of course, the sell-off in stocks and crypto and things. That's definitely something else that we need to address. But great questions. Absolutely fantastic questions. Okay, let's go ahead. Let's get over to the prime time, the big show. WTI crude oil. This is crude oil futures, April contract, I believe. Yeah, we should already be bidding April anyways. Spring seasonality typically is bullish for U.S. oil, but now with a war, it takes it to a completely different level. I mean, I would say that if you were ever going to go to war, and it's not necessarily ever a good time to do it, but if you were ever going to do it, you probably want to do it in the wintertime. You don't want to do it when we're already pricing April crude and you're seeing spring seasonality drive prices higher. You don't want to see that because it's already bullish seasonality. From now until not Labor Day, but from now until Memorial Day here, the end of May, typically you see more bidders. You see more buyers than punters, right? So what do we want to do with that? Well, now you throw a war on top of that. Now you throw the Strait of Hormuz onto that, and you've got increased travel demand coming up for the summer months in the Northern Hemisphere, and the whole dynamic changes. The whole dynamic changes. It reminds me of 2011 so much, you guys. History doesn't repeat itself, but it damn sure rhymes. That's exactly what I'm seeing. And the top side of this market, if you sink a ship in the Hormuz, if all of a sudden it looks like Iran is going to be formidable in the region, and maybe they have a lot more missiles than we thought, we talked about that this morning, there's no top for this market. There's no top, and right now we are at a pivotal period. You're either going to be able to wrap this thing up and decimate the Iranian military, not just the big assets, but also get control of things on the ground, eliminate the rocket attacks. We'll show you more of that stuff in a second. But what is important is that this means instability. It means that it's not going the way that it was supposed to go, and we already see that 5 days in. Now, we knew this initial gap open, all right, to open the trading week. We all knew that. That was easy. We talked about that in the middle of the night Friday. I said, yeah, you're probably looking at 72, 50, maybe 70 as an open. They opened at 75. So we're in the ballpark. Since then, we've gone higher. We pulled back, and now we've gone higher. Why have we gone higher? Because this thing's not over yet. And the longer it goes, it means the more of a stranglehold on the global energy market that region is going to have. This is big. In any case, what I would be looking to do is just buy pullbacks. I'm going to show you this level. This is one to write down, but honestly, it's probably a waste of time because we don't really know where the top of this market is just yet. But this is the futures contract. I'll show you the CFD here in a second. But your futures, April crude oil futures right there, 73.75. Pretty good shot. You got a pretty good opportunity there maybe to step up and get a bid. We're $6 off, 5.5. It can happen fast. That type of thing can happen fast. We could see a major sell-off, especially if it looks like the tides have turned and this thing's going to wind down. That's the first thing I would say about that. Definitely know where your pullback zone is. Now, from a more of an intraday scalping perspective, we had some talk going back and forth here in the trading room. There was some resistance up there at 80.70. I agree. I think that those were some key levels up there, some converging indicators. For me, this is what it's all about. Big round numbers. It's easy. It's easy to trade. Everybody can really grasp the big round number concept. There was 80, and there it was, 79.97. We pulled back, and now we're making another run at 80. 79, we're hanging right around 79.50. Remember, we were in a log jam around 75 yesterday, the point of control. Let's take a good look at that chart. I'm going to pull a time price offering chart. You're seeing this more and more from me specifically because I want to show you exactly what's happening as the world prices WTI crude. Now, this goes into market profile stuff. I'm not going to teach a class on market profile right now. I'm going to give you the key concepts. Point of control yesterday was what? Right around, or sort of crept a little bit higher late in the day, but it was right in this area. Right in this area, we did the bulk of the trade. Well, that's the white line on the right is for today. You can see we're about $77. That's our point of control. Okay, that's great. What you've got right there is your upper value area, your lower value area, and we've just broken out. Absolutely broken out. So when we start looking at this going, oh, now what are we going to do? Well, we're trading the upper extreme. We're either going to reverse off of this and maybe trade back down into our value area, or we're going to break out. I think given this news cycle, more than likely you're going to break above 80. Now, I'm not saying that for certain, but what we do know is this. A tremendous number of sellers stepped up to the plate right here, and they protected 80. So the sellers won right now, and now the bidders are starting to win down in here, and just like that, we're making another run at it. Would I scalp from underneath 80 right now? No way. Don't sell it. Don't sell it under 80. That's been had. That's over. That's kaput. Now, we may not go over 80 again today, but if we do break 80, and it looks like we may do it right now, if we do break 80, you're probably going a lot higher. A lot higher. So let's step back and look at our macros. Let's pull up the U.S. oil contract to do just that. And you can see, I mean, look at the explosive nature of this market to the top side. It's just no sooner than we talk about it and say it than you're going to see a run right at 80. Maybe it makes it, maybe it doesn't. I think it's incredibly risky to be taking a short from that zone right now. So let's step back and see if we can find something else. U.S. oil, we got all sorts of lines and stuff up there. Let's get rid of all of it. All right, so we've got all this stuff. What do? This is the big enchilada and what's happened in crude oil since 2020, the last 5 years. Now, you remember our Fibonacci's start down here at about minus 40. That's actually what crude oil was being priced at during COVID, in the April after COVID. And you see this was just a rally, and then we sold off and just sort of milled around. And then when Trump got in there, we saw some steady selling. We're starting to settle down in the mid-50s, and now we're up around 80. That's fascinating stuff. Could we run a Fibonacci maybe from these extreme peak highs, maybe these post-COVID highs, all the way down to maybe down here, these Trump lows potentially? It's sloppy. It's not pretty, but it's not bad. Interesting. Let's step back a little bit. Let's step back to a yearly chart so we can see exactly what's going on right now. There you have it. Spike high, spike low. What is that, a 4-year range, 3-year range? 1, 2, 3, 4. 83.50 probably. 83.50. I mean, that's absolutely staggering. Let's go to a weekly chart. So you can see on our weekly, when was the last time we were trading up in that zone? 2024, 2023. Fascinating stuff. I think that if I was drawing a line in the sand to where this rally needs to end, it needs to happen right around that, right around 83.50 to 84. I'll give it another 50 cents just because there's so much volatility. How about this? Between 83.50 and 85, that's where this needs to stop. If it does not stop there, then we start moving up by leaps and bounds. And then we start challenging yearly highs. You can see right there, that's September of 2023. That's 2023's highs. Then we really start rocking and rolling until we get up around that $100 level. Now, make no mistake, if chaos does happen and the world does end and it is a severe breakdown, then you're going to see some real situations with regards to oil. It's going to go to 100 if that happens. And here's the deal. It'll happen fast. It'll happen really fast. So what about some Forex pairs? Absolutely. Let's look at some Forex pairs here in a second. I think that's a great question, Bobby. We'll get over to that Australian dollar, New Zealand dollar. I want to look at that. Let me see. Babjee's, good to see you. Babjee's, welcome. Let me see. FR, is global regulation helping or hurting Bitcoin? It's a good question. We'll talk about Bitcoin in a second because I think the biggest thing facing Bitcoin right now is the AI data centers in the UAE. If those get hit, I mean, Amazon had one hit the other day. If those data centers in the UAE get hit, God only knows what that does to the blockchain. I mean, realistically, there's so much computing power and energy in that region. You could see Bitcoin may have a big pullback just because we're not sure of the future, how long it's going to take to get the world back deep into that AI when a quarter of it's been knocked out. I don't know if that makes any sense, but right now the link between crypto and AI is very real, and it feels like one bubble may be supporting the other bubble. So if you do see that AI bubble pop, what does that do for crypto? I think it hurts it, no question about it. And I don't know if global regulation will have even remotely have any impact at all. Okay, there's our break. Now, we just talked about this just a second ago, and this is why you've got to watch yourself. You've got to watch yourself when it comes down to scalping WTI crude in front of key levels. You've got to. You know, this right here, bam, this was beautiful. You had a bunch of intraday shorts that were lined up. They had their stop losses right above that daily high. And as soon as we broke, there was more stop losses above 80. Now you've seen the algorithms kick on. Look at our volume, 2.6 thousand in a minute. The real question is does this continue? This type of runner right here could turn into a major move, or it could fizzle and come back. For me right now, incredibly bullish. Incredibly bullish, and that right there is why you can't do that the second time through. If you're gonna scalp in front of 80, I say do it, but man, first time only. This right now, we are rocking and rolling. More than likely, another news item. I'm gonna have to check the feed here in just a second. Bobby Bob, what about the Forex pairs? Have a look at gold. Absolutely, Godfried. We're gonna look at gold here in just a second. 5,000 though, if you want the Cliff's notes on gold. This is one where we may be able to miss a little of the headache that's coming our way with the U.S. dollar. The U.S. dollar right now is ruling the roost, right? It's very, very strong. Again, you've got the Australian dollar, New Zealand dollar, gives us some insulation from that. You've got gold driving the Aussie, and then you've got Kiwi. It used to be based on powdered milk and everything, and now I think it's pretty much just the RBNZ dictating policy. This is a good level right here, though. A Forex pair. This is one that I would be looking at. Aussie Kiwi, nice regional pair, 38% down there, right around 118.07. That's a pretty good one. If you do get a pullback there on a weekly chart, I think that's absolutely fantastic. Potential go zone if you're looking for maybe a cross pair where you can do a little business without the U.S. dollar involved. As far as if you are looking at the U.S. dollar, take a good look at this Euro USD. This was a trade that we talked a lot about over and over and over again earlier today. The daily chart, did we want to be long or short? Essentially, you did want to be short. That was sort of our quick and dirty of it. Daily retracement went right up there, failed at 38% multiple times at 116.50, and now we're down there right around 115.71. If I'm trading the Euro USD and I'm interested in potentially having a trade for later today, step back, look at my monthlies, right? So our monthly, huge run up here, and then we just sort of been flatlining for a while, which is typical of the Euro USD. 13-month EMA is present at 115.11. That's huge. Let's go ahead and run a quick Fibby from here to here. Beneath 78%, 115.97, 116. We've broken beneath that zone. So for me, the biggest number on the board for the Euro USD is going to be right down there. It's right around my 13-month moving average, which is 115.11. I would just take that right down and mark 115 even on my charts. Somewhere right in there, you're going to want to know that. You're going to want to know that area. That's absolutely huge. So is that support or resistance? That is robust support. Robust support. Let's go ahead and throw a yearly chart up just because I'm interested. I've been going to the yearlies a lot. Typically, I do that early in the year, but not necessarily as much as we've been doing it. Why do you think we'd go to a yearly chart? Because it's big. Because the ranges are big. The moves are big. When they're big, we step back and look at longer time frames. Step back from 10,000 feet, attempt to figure out what in the heck's going on. Okay, so this Fibonacci's way down there, 113.50, but take a look at what's not way down there. Yearly 13-year EMA, 114.81. I would write that down. So you've got 115.11, you've got 115.11, and you got 113 or 114. So what? 114.80. I mean, that's just an absolutely staggering area of downside support. So be very careful if you're deciding to sell into the teeth of that support. I wouldn't be so. That's a not so fast. We're liable to catch a nice bounce off of there where you've got two. And I don't know that I've ever seen that, but a monthly and a yearly that close together. I mean, essentially that zone between 115 and 114.75 there could be an absolute ton of bidders in there. An absolute ton of bidders. And this is also where the rubber could hit the road, and we could see that shift. We break beneath that moving average maybe for a month or two. Then we start to really question the dovish read on the USD for the rest of this year. That's a big deal. That's a big deal. Okay, gold. Let's go ahead and look at gold. Gold analysis has been very simple, Gottfried. Very, very simple. This is one of those that we were looking hard at 5,000. Now, 5,000, when we had the big move on the 3rd of March, which was Tuesday already, it feels like it was 5 weeks ago, but the big sell-off and then the big bounce off of 5,000. Now, think about what just happened in $80 in crude oil, where that market exploded above 80. I think you're probably looking at that same type of situation here at 5,000. if we put in another hard test of 5 and it's coming right at us, that low, that Tuesday's low, 49.96, probably want to be a seller under there. It looks to me like it'll be a big time washout, So for me, 5,000 is the big one. I don't want to buy it. If you want to buy it from 5,000, stop yourself out before you break beneath Tuesday's low, because this type of move, you had the big move, the compression. Now the throttle's starting to open up a little bit, and that can be problematic for a lot of different reasons. I would be watching the bearish side of this thing if we break beneath 5,000. I really would. We could see maybe something similar, probably not that type of a move, but maybe that type of a move, maybe a 5% loss down there. You could definitely see that. Let's go ahead and step back and see if we can find a support level, a long-term support level here for gold. And, these have been on the board forever. There's really no point in me drawing them, but I'll go ahead and do it anyways. Spike low, spike high. I mean, you can see that was the trade. That was the trade last month. Went right down to 44.25 and exploded. Do we go back down there? I doubt it. Maybe. I think we sell off and probably get down into this tail a little bit, maybe 4,800, something like that. Let's back this off from a monthly to a weekly. More of a challenge just because it's been so choppy on the daily time frame. You can see we sort of have a spike low there and then a spike high. I wouldn't get too involved with this just because it's so tight. I don't have that much confidence in it. But there you have it. So my call for this market, this is a big level, 5,061. I mean, this is big. If this comes off, but it's already come off this week, so I don't know that it's the line in the sand. If this was our first test of it, of course, it would be very important. But right this minute, do we come off? Do we rally? I don't know. But I do know this. If we go down here, we break beneath 62, maybe a downside target beneath Tuesday's low would be 49.65-ish. So you're probably looking for maybe another $30. And you got NFP tomorrow to contend with too. So there's so much going on with gold that it's really, really difficult to put our finger on it. I found gold to be tricky. The way that everything looks is very, very tricky right now. I would be careful. I know I say that every time, but I would definitely be careful here. As far as silver goes, before anybody asks, silver, sort of came off a little bit earlier this week, down about 77. For me, silver is pretty simple. 75 is still the big dog. Right down around 75. And those aren't exact, but definitely dial those in exactly when you get a chance. And I'll do it right now. Why not? So that area right there, pretty big point of control. A lot of business done at 75. Last couple times it's acted as support. Probably they're going to get the same type of price action here. Step back to a monthly chart and see if we have a Fibonacci that can line up with that. It's ugly. It's really ugly market structure for this to try to do this type of stuff. But, there you go. 76.50 to 75. More than likely, that'll be your support zone, at least for a short time period. We could see major sell-off, so no question about it. And right now, with the dollar up, capitulation in full swing, you've got gold moving. You've got silver moving. Money's going into crude oil. No question about it. Absolutely no question about it. So we're definitely on thin ice here. The Dow just cracked under 1,000. See you later. This is fascinating stuff, but price action wise, 15-minute chart. Let's go ahead and pull it up. I mean, that's our line in the sand. This right here is a great example of why I use Fibonacci's. Boom. I mean, we hit it perfect. Boom, boom, boom. Those are great trades, great scalps. And now you're sort of off to the races. You see that little 15-minute pennant? It was good for, about an hour there, 45 minutes, and then it finally broke. And when it broke in a big way. I would not want to be holding longs. Now, this still could reverse. I mean, we could still be looking at maybe a 30-minute chart, something like this late in the day where we get that hammer formation. We get that hammer, maybe even a doji right on this line, and then we can maybe get a late-day buyback. But right now, things are absolutely in a free fall. Absolutely in a free fall, that's for sure. Godfrey, thank you. All the way from Tanzania. Wow, that's way out there. It actually snowed a couple inches here. I'm in Dillon this morning. I was out scraping it off the sidewalks. Check out the NAS 100. All right, why not? So here's a US 100 chart, 30-minute chart. You can see that we've sort of broken from that 25,000 level. Still haven't really left it though. I mean, my analysis has always rotated around 25,000. And that's exactly what we've been doing for a long time in the NASDAQ. So is this a real move? Not really. Honestly, not really. There's your bullish flag. Step back to our monthly. There's your bullish compression. Boom. Uptrend, compression, right around 25,000. That's why we see the price action we do. It's the numbers. It's not the participants. It's the numbers. The numbers draw the participants. The participants don't dictate the numbers. That's just sort of the way that it works. I mean, Goldman Sachs steps up and says, okay, we're going to dig in and just sell 25,000. Well, it doesn't take everybody else in the market long to figure it out. They're saying, okay, well, we're not going to really go too far beneath 25,000, but if they're selling 25,000, we probably don't want to be hanging on to longs above 25,000. And everybody just sort of figures it out. It's a balancing act. That's called an area of fair value right there. There's no question about it. So if I'm trading this intraday right now, there's a couple of observations. Number one, we are very tight. We're very tight for the first 5 days of March, which is great. There's no problem with that. Eventually, this thing will move. And when it moves, it is just going to be an absolute, it's going to be a light show. Be watching last month's low, no question about it. And if you do get a break beneath February's low, then yeah, we're probably going to get a deeper pullback. For right now today, go right to the bread and butter, the 30-minute chart. And you say, okay, Shane, what's going on? It's a trend, right? I go, I mean, the pressure's down. No question about it. The pressure is definitely down, but is it a trend? I don't know if it's a trend or not. If you wanted a late-day scalping location, this would be one that I would consider. 25,000 right on the nose. Okay, let's go ahead, pull that up. And this is one of the reasons why I'm big into fractal geometry. I'm big into multi-time frame analysis. When I know that there's a key level on there, we could even do a TPO, I guess. TPOs don't really work on OTC markets. But when you got the big move, you got 25,000 is sort of the point of control. You can see we traded it all morning before we finally broke. What if we had a chance to sell up there again? Well, you see right there, that's sort of the second half of the trading day. This right here would be the U.S. Sessions high, that New York high. So if you were rolling maybe right from here down to here, somewhere in here, maybe if you pushed a little lower and pulled back, and then you had that 62% lineup right around 25,000. I mean, that's fantastic stuff. It really is. Even right there, even on a rally from here, it's a pretty good sell. So that would be a late day idea for me. That would be a short. And you'd say, Shane, what are the odds of that coming in? And I'd say, well, you're 240 points down. So you basically are talking about the US 100 fighting back to scratch by the end of the day. That would be interesting. Is it possible? Yeah, it's possible. Do we want to sell 38% right here, 24,912? You could as a scalp, but you can't be looking for many pips. I mean, that's a quick hitter. You're in and you're out. You're not waiting around. That's a lower percentage trade, but it could be taken just to try to get in on the downward pressure. But the problem with trying to trade Fibonacci's on a day that it just really isn't a trend. It's more of a tight one and then a break, and now we're tightening up again. Sometimes these things just reverse. And you don't want to get caught in that reversal if you're trying to play a real aggressive 38%. So that's what I would be looking at there for the US 100, the NAS 100. That's for sure. Okay, guys, we got a bunch of stuff to cover. Remember, if you want to not talk to anybody, but if you want to definitely trade any of these ideas or concepts that we're talking about today, or markets, Switch Markets has you covered. Thousands of markets, tight spreads, you name it, they got it. The big thing is the leverage. They have been adjusting the leverage a little bit to sort of reflect the volatility in the silver market especially. So this leverage will vary depending on your municipality and also which products you're trading. But the spreads are ultra low. You could definitely be looking at a euro spread, very, very tight. So definitely check that out. And even for small traders, $50 minimums, $50, you're up and running with a trade. That's not a bad deal. And then the biggest thing I always say to everybody that asks me about Switch is go to Trustpilot, read the reviews. Go to Trustpilot, read the reviews, ask other traders. You can certainly do that, and that'll get you up and running. Okay, let's do a quick news blitz and then maybe one or two markets. Here it is. U.S. oil crude top 79. Right now we're printing, let's see, 80.47, somewhere in that zone. I had a market call earlier that was calling for what, an 80.70 was the sell. Yeah, we went right up to 81 and then pulled off 50 cents. Wow, that's absolutely unbelievable. Our news is all war-centric. No question about it. That's what's driving these markets. U.S. crude oil tops $79 per barrel after Iran says it attacked a tanker. It attacked a tanker. This is interesting, right? So what does that mean? Well, the British Navy on Thursday reported a large explosion at a tanker at anchor in Iraqi territorial waters. So it looks like a missile did hit a tanker. Could have been a random type of an event. It wasn't hitting the Strait of Hormuz, which is what everybody's watching. is the Strait of Hormuz. Definitely one of those things that could develop at any time. If something gets sunk out there and that channel is restricted, right now it's that choke point. It really is acting as a choke point. Nobody's going through it because they know attacks are imminent, and there's a lot of skepticism on making it through. I know if I was a boat captain, I probably wouldn't want to go through there. No way. That's the hottest shipping lane in the world right now. No question about it. But this is big. So they hit a ship. This one right here broke after we got off the air this morning. So there you go, breaking news, and you can even buy some shirts and stuff. Let's see. U.S. jets will support Kurdish invasion of Iran. That's the next thing. We were talking ground offensive this morning. It has now officially been admitted. It's officially been admitted, and this happened about during the midday. You can see that what you have, Iranian drone strikes, airport in Azerbaijan. All of a sudden, it's going big. It's going big. Spain sends most advanced frigate to Cyprus. We've got people going to Cyprus. We've got everybody, U.S. planning for a 100-day war, and they were basically saying September was a timeline. That's a lot different, isn't it? That's a hell of a lot different than 4 or 5 weeks. This is escalating quickly. Iranian bombers were 2 minutes away from striking U.S. base. Qatar down 2 Su-24 tactical bombers as they targeted the base housing 10,000 U.S. troops. That's not good. Tehran attacks Kurdish fighters in Iraq. There you go. Iran hits back after Israeli barrage. They launched a huge offensive today with the missiles, and this is how it's going to be. You can see Macron sends armored vehicles to Lebanon and tells Israel to stop invasion. It is on. It is on like Donkey Kong, no question about it. Right here, Iran foreign minister, not hearing much out of the Iranians at all. It's like everybody went underground and they're just popping up to shoot missiles and going back underground. But right now, the Iran foreign minister not asking for a ceasefire. Interesting. Not asking for a ceasefire, warns U.S. invasion would be a big disaster for them. So something's cooking. I think the invasion's already been set up. I think you're going to go with the Kurds first. If, in fact, that does not work, then you will see U.S. and probably maybe even NATO boots on the ground. You'll see U.S. and Israeli boots on the ground. I think that's coming. Take a look at our poly market odds. Right here, U.S. forces to enter Iran by March 7th, which is this weekend, March 14th. But by the end of the month, there's about a 50-50 chance. Wow. That escalated quickly from no boots on the ground to this is a surgical decapitation strike to, well, we'll put boots on the ground. What's happening? What's happening right now? It's escalation. This is how wars work. I don't have to tell many of you have more experience with it than I do, but I can tell you that if you study history and if you look at and just listen to some of the folks that have been involved in wars here in the United States, it always seems to be the same thing aside from World War II. It always seems to just gradually escalate. Goes to Korea, starts out as sort of a police action, hold the line diplomacy. Korea escalates and escalates and escalates and escalates until it was a major war here in the United States. Nobody really even talks or knows about the Korean War. That was a big one. Korea, Vietnam, same thing. Starts out small, sending in military advisors to train up the South Vietnamese. Then what happens? Bigger, 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 bigger. The Iraq wars, shock and awe. Okay, we're going to go in hard, shock and awe, shock and awe. And they drop all the bombs, and then what happens? Bigger and bigger and bigger. The first Gulf War wasn't like that. That was a knockout punch to Iraq early, but you'll notice that they didn't remove Saddam Hussein from power. This is different. They're talking regime change. That means they're going to have to change the regime. And that means this stuff here, boots on the ground, suggest full war, absolute full war. And that is huge. So for natural gas, what could that mean for natural gas? Well, I mean, if we go full war and you see those choke points really act up, you're going to see a big-time spike in natural gas prices. No question about it. We haven't seen it yet, though. Right now, those LNG markets seem to be pretty calm, which is surprising because we've already had a huge, an absolute huge facility that was hit inside of Qatar. That was a big one. You had that one really, I think it was, and then 20%, I think, of the world's natural gas goes through the Strait of Hormuz. So you've got some real problems. No question about it. Gas, more than likely, if this thing explodes, is going to spike, just like oil. Right now, though, it really hasn't. It's settled in right around 3. We want the bid down here. We would love a sell-off and a bid. We've had that trade ID out for a long time. We haven't just really got to it. Today, when we check out our news of the day, you'll notice that natural gas storage came in at negative 132 billion cubic feet. That's North American underground storage. And what that suggests is that we are going to start, at least here in the United States, going to start using more and more of that domestic supply and probably even exporting some to places in the EU, for instance, more than likely as the war effort continues. 4-week T-bills tick higher a little bit on yields, and then the 8-week T-bills stay the same. But those 4 weeks, at least in the immediate term, those yields tick a little bit higher, suggesting that the federal government's ready to pay a little bit higher yield to get some money coming into the coffers, essentially in the short term to fund this shenanigan. I mean, you're going to have to buy more missiles, right? What can you really say about it? What can you really say about it? I think we've said it all. I mean, the situation's fluid and it's unraveling, and it looks to me like it's not going the way that they thought it was going to go. We'll talk more about that in a second and then sign off. But this really is the level, 2.639. That's the level in gas that I'm looking at. Beautiful bid from down there. But other than that, not a whole heck of a lot. Okay, let's just go rapid fire through a few Forex pairs. We'll check on our trade, and then we'll go ahead and sign off. Let's take a look at that guppy. Trade idea here for the guppy. We were looking at that 208.50 level. We just aren't even close anymore. We sort of ticked higher. Shouldn't really surprise anybody. Let's look at the pound dollar. Pound dollar coming off in a big way. Bit of a rebound, though. So if we're stepping back to a monthly, you can see we're right at that 13-month EMA, sort of choppy in there. But that 133 level, I would keep an eye on that. That's a big one. Something like that. Huge area. We're trading all these long-term levels. We're trading them right now, and that tells us that our markets are in a state of flux, and everybody's debating on what everything's worth. That's the bottom line, and that's what war does. It brings uncertainty, and right now, as it stands right now today, things are not going the way that we thought they were going to go, or at least the powers that be, it's not going the way that they thought. We'll cover this again more tomorrow with NFP. I'm probably not even going to get to preview NFP today, but that's all right. I'll be on early tomorrow so we can get up and get previewed and ready to go with our jobs report. But this is fascinating stuff right here in this pound dollar. Let's go. Let's try one just way out of the box. Let's go Euro Kiwi. All right, this is good stuff as well. I mean, really fantastic trading, and we're right at the 13-month EMA. So what are you doing here? I mean, typically these EMAs just do not come into play on a monthly time frame. Spike low to a spike high, you're just trading in a huge level, absolutely huge level. What I would consider doing if I was trading this pair is wait for a pullback and maybe even sell it. Maybe even sell it. You can see we sort of had a really tight February here, bounce off of that moving average, and you could even step up and maybe do something like this if you were inclined. 199.50, probably a pretty good sell up there. Let's go to a weekly on this Euro Kiwi. Yeah, that's exactly what we would be looking to do here. You could even bring your entry down just a little bit. Fantastic price action there for a few weeks. Spike high there, spike low, pullback zone right around 198.63, somewhere right in there. For next week, I'll bet you for next week that could be a very, very strong play. A very strong play because you're going to have your moving average is going to come down a little bit further and converge right there on that 198.75 zone. That could be huge. All right, everybody. I think that's going to be about a wrap for today. Let's take a look at our 9 EMA. I got one question over there. 9 EMA going against us a little bit, but that's all right. There's a lot of room there to work. A 4-hour sell on that Bitcoin. And then let's go ahead. Euro Kiwi, 5 minutes. Yeah, there it is. Boom. So right there, we got that one a little while ago. If you survived that rush right there, you're probably still in there. Let's go with a 15-minute. Get a 15-minute close. That would be a sell signal. Interesting. 30-minute, that probably would be what I was looking at. 4-hour, you're not going to get that. 1 hour, I'm not interested, but a 30-minute, potentially a 30-minute, you could get a sell beneath that zone and have an opportunity on that Euro Kiwi. All over the charts, let's have a look. And there's Mr. VIX, the volatility index, up about 18%, up almost 19%. And remember, sort of where I begin to start thinking market crash is right up around 30. We're there. We are pretty close. We are pretty close to being there. Look at this. Boom, pulled right back to that long-term average. 21 has been absolutely huge as a long-term average. And now the VIX is moving higher, which means stocks are typically going lower. All right, got a few comments here that I'm going to go ahead and sign off for today. We'll be back tomorrow with NFP. I'll preview it before the big event's out, so we'll just do that tomorrow morning early. Check your local listings. I'll be on at least 10 minutes before the NFP release, maybe 15 or 20. I don't know. It just depends on what time we get up and get prepped and ready to go here. But it's going to be bright and early. So NFP live tomorrow. Be sure to tune in for that. Usually one of our biggest audiences of the month. So that'll be exciting. Let me see. Kidnapped. Good to see you, Kidnapped. Welcome. Hello. Hello. I've been watching your videos for a bit now. What would you say I should focus on as someone who is still a beginner intermediate level during this time? Risk management. The number one thing that everybody should be thinking right now when faced with volatility like this, we all want to trade and we all want to make money, but risk management. Keep your powder dry. Save some money. Save some money for when this slows down a little bit. I agree 100% that if you're a trend trader and you have a way to get in on breakouts and trends, these moves, catching a few of these moves is incredibly lucrative. You can make more money than you ever dreamed of. However, the problem you run into with these markets, especially if you're trading them on smaller time frames, something like the US 30, for instance. I was running some new strategies. I was just screwing around this morning on a demo account and just absolutely just got caught in a couple of reversals for no reason. My point is this: the daily ranges of these assets right now are so big that you can get chopped out of great trades before the move comes, and it's not really your fault. It's too expensive to place your stops. You've got to sort of think, okay, well, how can I trade these things with certainty that I'm not going to get wiped out if these markets just sort of eat me up? Risk management, 1% to 3% on any given trade. Watch your leverage. That would be the number one thing I would say, Kidnapped. Be careful. Caution's a better part of valor. You don't want to get swept up in a mania. You really don't. Let me see, Zubu. Good to see you, Zubu. Welcome. Low time frame trading are so risky. Yeah, when you start when you talk about a range, let's just look at this US 30. I was running some I got a couple of real cheap evaluation accounts. I don't know, they were like $20 a piece. And I was like, let's go ahead and try a few new strategies I've been working on based on a 5-minute chart. And, you take a look at these 5-minute price bars, and basically I was looking to get short, but look at the size of some of these things. That one right there is 0.25% in 5 minutes. That is absolutely huge. It's down. Let's see your full range. What is your range? Well, let's just look at it this way. The ADR was 99 right there. So if you're 90, your average direction or daily range, it's really a periodic range. A 13 period average on a 5-minute chart was 100 points. That's staggering. Who can afford that? So what you've got to do is you've got to cut your risk way down and say, okay, even if I'm right and I take the short here, and then you take a long, or maybe it comes against you, or you're shorting right in this area right here and it jams against you, you got to have staying power. And if you don't have enough cash, you run into trouble. And this right here is just textbook on short time frames, like a 5-minute. I mean, it's absolutely, I mean, these washes are huge. Look at this. I mean, that's just a huge wash to the north. And then you come off big, and then you wash everybody else out, and then you keep coming down. You wash them again right here, and then you just sort of creep, and then you make another leg down. So the shorter the time frame, the choppier the price action, no question. No question about it. Absolutely no question. So, yeah, I would say that low time frames, they're cheaper to play, but they are, riskier. You risk the chance of getting chopped out before the market really goes in your direction. And we saw that it was over and over and over again on the YM today, which is the E-mini Dow futures. So I wanted to trade the 5-minute, which indicators are best. Yeah, Zubu, if you wanted to start on the 5-minute chart and you don't know really how to trade, I've been really pushing the 9 EMA out there, the 9 EMA strategy, just because I built the whole strategy pack. And it's a pretty good strategy that can get you into some good trades. Go ahead and check that link out. That'll get you up and running. It's enter your email, and you get the strategy pack with the custom EA and everything you need to trade it. And that's not a bad place to begin trading the 5-minute chart. Just do it. Make sure that you're doing it during that London U.S. overlap. You want to be in there when the markets are at their most active, for sure. Let me see. Naomi, good to see you. Naomi, welcome. Just missed you, but I'll watch the replay. Thanks again. Absolutely. I sure appreciate being here, Naomi. Any way that I can help is always a pleasure and a privilege. Absolutely kidnapped. You're welcome. All right, everybody. I'm going to go ahead and sign off for today. We've been going double doses, 2 streams a day, starting pretty early for me, so it's about time I do some other things. Probably put a trade idea out a little bit later today that's going to preview NFP tomorrow. Remember, I'm back for NFP live tomorrow, and we're going to go ahead and do what we can to get on the right side of this jobs number. But I have to tell you, right now, the U.S. stocks are in an absolute free fall. The war is escalating, and that's the thing about wars, is it's called an escalation ladder. You start here with airstrikes, and then you start doing this, and now we're launching a ground invasion. They're sending the Kurds in, and then what comes next? Probably U.S. boots on the ground. I don't really see any way around it. They know they don't have enough Kurds. It's not enough Kurds, and to be honest with you, I mean, I don't know much about the politics of the region, but I do know that a lot of those factions don't really like each other, and it's tough to see it not really devolving from here. I don't know. We're going to find out. But right now the markets are telling us that there's trouble afoot. So what's the volatility? The volatility will be Strait of Hormuz, number one. Understand that. U.S. launching ground offensive. They're not ready to do it yet, but that's probably coming next month. Those are the big things that'll shake the markets, no question. All right, everybody, I'm going to go ahead and sign off. We will catch you next time. So NFP live tomorrow. If you're interested, drop by. Check your local listings for your NFP. I'll be on 15 minutes, 10 to 15 minutes earlier than the release. We'll go through. We'll break it down. We'll show you what to expect, give you some trading ideas, and see if we can get on the right side of these markets. All right, everybody, until next time, trade the action well, and we'll talk soon. See ya.